Good morning, everyone. I'm Nick Bates, the Managing Partner at Aerospace Xelerated, and I'm joined today by three friends and colleagues from our investor community here, Obediah, Brian and Philipp, and I'll let them introduce themselves just in a sec. But today we are coming together to talk about navigating through a crisis, which I think is a bit of an understatement over the last few years, particularly in aerospace. You know, coming out of a global pandemic, now looking at an energy crisis, rising inflation across the world, and we're seeing the investment landscape change drastically, with it slowing down and startups finding it more difficult to raise money and extend their runway. So we're really thinking about how do we manage through that, and what are the opportunities that come through that for each of us. So first off, I'm just going to ask Philipp, do you want to go ahead and introduce yourself to everyone, please?
Yes, of course. But first of all, look, it's an absolute pleasure being here. Thank you for everyone involved to invite us and to kind of give this session to our audience. I'm here today representing the Dubai Future District Fund. We have a fairly new vehicle launched by the Dubai government, and we're actually MENA's first early stage focused evergreen fund. Before I tell you more about them, just a little bit about me, first of all. So I'm a three-time founder, originally from the UK and Germany. I founded a advertising platform for students during my studies, a crypto investment fund in 2015, and last but not least, an equity crowdfunding platform for independent filmmakers. About 3 years ago, I came to the UAE and I helped Microsoft set up their startup business unit across the MEA region. So that included the Microsoft's Founders Hub, the Growth X Accelerator that we launched in conjunction with the Abu Dhabi government and some of the big corporates in the region, as well as a virtual conference bringing together all of the ecosystem stakeholders called Highway to 100 Unicorns. I'm now responsible for direct investments at Dubai Future District Fund. And I'm also responsible for growing the portfolio companies and funds that we invest in.
Thanks, Philipp, and thanks for taking the time to join us today. Obediah?
Yes, similar to what Philipp said, thanks for having us, and well done for putting this together. But I guess a bit about myself. Obediah, Ayton, Managing Partner of Synaptech Capital, based in ADGM Abu Dhabi. Before I talk a little bit more on the fund, myself, I started off as an accountant for a family office based in New York, managing the back office of succession planning and wealth preservation. I then moved to London to work more on the buy side with a gentleman called Lars Windhorst, who we were about 5 billion assets under management at the time. So we were focusing more middle market buyout rather than early stage investing. My Chief Investment Officer was Qatari. He told me all these amazing things about the Middle East. So I decided to come out here, set up my own holding company, grew the portfolio in 2 years to 5 companies, exposing a lot of myself to Europe. Over time, built strong relationships in the region. And as of last year, we launched a 100 million VC fund called Synaptech Capital, where we invest in cybersecurity, public safety, fintech, and smart city. Which is very exciting, and we're new, similar to Philipp. We're fresh, and we're all obviously excited to get underway.
Thank you. And last but not least, to someone who's definitely not new, and not new to this community, Brian Schettler, who some of you may recognize, used to be part of the program, and is now with AEI Horizon X. So Brian, over to you.
Good morning, good afternoon, everyone. Thanks, Nick. It's great to be here. And yes, pleasure to be reconnected to this audience and extended group with the Aerospace Xelerated program. It was something I was very, very passionate about in my Boeing days and continue to be. I lead now a venture fund called AEI Horizon X. It's actually the dedicated venture fund that we built inside of Boeing that we spun off about a year ago, solely for the benefits of tapping into external capital, given the difficult situation Boeing was in as a result of COVID and the MAX crises. And so we wanted to ensure we continued to be able to resource our founders and then continue to invest sizable checks in the broader aerospace technology community. So we spun out to be able to attract dedicated LP capital, maintain a strong linkage to Boeing to continue to drive transition and adoption of new tech into the world's largest aerospace company, and just continue to provide as much value as possible to our founders and companies that we invest in. So we're doing that now via our second fund. It's a $250 million fund that we're out raising now and already have had a first close. We continue to manage our first portfolio that we invested in while we were still in Boeing, and try to bring those to successful exits and outcomes. Our focus hasn't really changed since we were inside from a technology perspective. We love hard tech, haven't ever been scared of it. And so we continue to focus on that and sort of the network and security side, as well as space. We have a strong mobility and climate focus to really keep pushing the next generation of flight technology, and with a sustainable focus, of course. And then lastly, a digital focus that's really driving the adoption of new software tech throughout that sort of travel and manufacturing and sort of enterprise landscapes. So it's great to be here. Thanks.
So just on that note, could I ask each of you just to give us an idea of the sort of teams that you invest in, maybe give us an example or two. And obviously with our focus this year very much on digital services, something in that space would be very interesting to the audience. Brian?
Sure. Especially on the digital services side, right? I think a lot of you that look at aerospace, either with direct experience or other industries, your first examination of aerospace realizes there's so much low-hanging fruit in terms of how you transition this industry to a more kind of digital future. A lot of traditionalism, a lot of old school approaches, tried and true, but incredibly inefficient, based on the technology of the times. And so how you start thinking about sort of new opportunities to drive efficiency, safety, quality throughout aerospace is extremely exciting. We've invested in a couple of digital services companies. I'll name one, Spark Cognition, that's really trying to drive artificial intelligence as a framework for how we do things more efficiently inside of aerospace. Now, artificial intelligence can be a scary word, set of words for aerospace, simply because of the certification angle of what we have to focus on in our regulated industry. And so, for their point of view, how you think about not just the technology and the end state of what you'd like it to be, but all of the building blocks of how you get there in a certifiable manner. So you don't get to the end line, the finish line, and realize you don't have a certifiable product. So I really appreciate founders that are really thinking about the milestones and pathway to get there, not just the goal line, because the road to get there is navigated. It has to be navigated very delicately, very precisely, to get to a state that can ultimately be adopted by big companies at the end of the day.
Thanks, Brian. Obediah?
Yes, so I guess we look at critical infrastructure. I mean, if you look around the world right now, there's a lot of things going on, is probably the best way to say it. So there's this genius company run by a founder called Evan, called NanoLock Security. They focus on utilities and industrials. Everybody thinks that your bank account is at your biggest risk, but what if one of your biggest power stations becomes at risk just down the road, from a cyber attack? So we call it MOT, which is management of things, which we all know of Internet of Things. So it's really a control-based cloud solution for industrials, utilities. It's going to be water. What if one day your water turns off? We all panic. So it's looking at critical infrastructure. The company is, progressing. It's B2B, so everybody knows how hard B2B is in terms of selling. It doesn't have to be as good looking as B2C stuff. Founder Evan, bit of a techie, but the good thing about us is above our fund, we have a mother company called Avnon Group that help him sell to 80 different countries. I guess that's our value add we give back to founders, is we're not only just a small VC, we also have a bigger entity that is already operational in 80 different countries. So it helps us. So we see ourselves as a bit of a sales arm for a lot of founders, and we love selling good products, that we believe in and we back. So that gives you a better size. We invested at a Series A round, and our fund is sweet spot at the moment is seed to Series A.
Thank you. Philipp?
So before I dive into what we've invested in, let me just give you a quick overview of what the FDF is all about. So we are a privately managed venture firm, but we're deploying 100% of public sector capital. So basically, it's the Dubai government that has anchored the fund at the end of last year. So obviously, it's our intention to deploy this capital and to generate return for our LPs. But beyond that, we are also representative of the UAE's national development agenda. So that means when we are considering investments, we're also looking at how this helps us diversify the local economy, how we can create jobs, how we can nurture talent, and how we can emphasize Dubai's position as the business hub that it already is. At the moment, we've got 2 LPs in the evergreen structure. Evergreen means that we keep on growing that as time progresses. And we've been funded with $200 million at the beginning of the year by the DIFC. So that's the Financial Services Center of Dubai, and the Dubai Future Foundation, a government entity. And we're deploying this capital that they've given us split across 2 verticals. One, funds of funds, the other one is direct investments. I'm personally mainly responsible for the direct investments, but if there are any fund managers listening that are looking to operate across the region, feel free to reach out as well. We've got very much an early stage focus, so we like everything from seed to Series C. How we're different from other funds is that, yes, we deploy capital, but we're really taking a stab at value investing. So our USP is that we are in close relationship with all of the government entities, as well as the private sector, which obviously holds a lot of value within itself, right? So we're looking to unlock that value for the companies that we invest in, which also obviously drives our investment decisions to a certain degree. But similar to what was previously said, we can help with go-to-market strategies. So whether that's facilitating interactions with some of the private or public sector entities, we can help on that. We can help on the regulation and compliance side of things, and we can expose our founders to great talent, not only from within the region, but also globally. So on the direct investment side, we have 2 separate buckets. One is called Future Finance. So it is what the name implies, is basically fintech and everything below. And we venture out fairly far in that bucket. So we like Web3, we like very alternative kind of concepts. But yeah, so it really depends how it really hits the other requirements that comes in line with the UAE's development strategy. And the second bucket is called the future of economy. So there we're really looking for solutions that help us future-proof Dubai as a place to do business and to live in. So just a few examples of who we've invested in. On the funds of funds side, we've recently backed a fund that probably all of you would know called Shuruk Partners. They're based out of ADGM, a fairly broad mandate, but they're established investors in the region. So it's not just established investors that we're looking at. So we like international investors that are taking the MENA region as part of their mandate, but also fresh out of the box first-time fund managers that are wanting to give a stab at it. Build is a African-focused VC that we've recently backed as well. So on the direct investment side, there are 2 fintech investments that we're quite excited about. The recent announcement of Loon Technologies was published not too long ago. They are a software that's enriching transaction informations. So it allows users to really get a better view of their spending habits and then make educated decisions based on that. So super cool founders, a lot of potential in the region. They've got very amazing contracts with some of the biggest financial institutions. So super excited to help the Loon team further grow their business. Another one which I personally really like is called Zest Equities, and their marketplace for private equity. So that's allowing startup founders as well as startup founding team members to sell and trade some of the ESOPs and basically get liquidity options on the equity that they own.
Excellent, thank you. So we can see that you know, all three of you come from pretty different perspectives on this investing landscape. So be interested to hear what, you know, what each of you think are our current challenges, you know, given the current investment landscape, and how do you think this really is going to affect the startups that are looking to raise? Obediah, let's start with you.
Yeah, so I guess most investors at the moment are looking for, I would say, a bigger list than before, meaning that they're just looking for more strict requirements. Now that's only fair because we can't see the future just as much as most of the founders can see the future. You know, we may have made history of good investments or seen a good product in the portfolio that has been through times like this, but at the same time, we never know, you know, just as much as the founders. So my point is, we are fairly good and we know the B2B side of things. Now with B2B, I call it, if you're a big business and you're trying to sell to a big business, your goal is to kind of win the life cycle of your customers. You don't really want to use third parties or somebody in the middle. So I think some of the best solutions at the moment are the people trying to win the 360 lifestyle of the customers. Now, on the B2C side of things, this is where we're a little bit nervous, but it doesn't mean that it's not, you know, something of interest. It just means that we're a bit nervous on founders burning cash in a consumer market that may not be as, I would say, favorable or looking to spend, you know, money that they've got in their bank account. So another angle is we're looking at B2B for banks. You know, for all of us, where do we feel most safe? We feel most safe with our banks. So if it's banks offering insurance product, new products within the portfolio, maybe be a crypto wallet or some type of aspect down those lines. We're looking, you know, at the metaverse to some extent. You know, the metaverse for all of you, anybody listening, sounds very expensive because it is very expensive on energy. I think we're looking at very key aspects of the supply chain, because if you actually break down the metaverse in terms of supply chain, there's some amazing things. So if I'm a drone company that does 3D imagery of villas, very useful for a lot of people, right? I can then sell that 3D imagery to the real estate broker company. The real estate broker can do virtual viewings where they can do, you know, 12 viewings every hour. They don't have to drive around Dubai in the heat, you know, build up all the way to the traffic here, you know, make certain viewers very stressed because they turned up late. So we're trying to find key pieces within kind of bigger pictures. So my point is, for founders, I think the best thing to focus on is be a little bit more local. Try not to think about, you know, spending too much cash to acquire new users while everybody's a bit, you know, self-conscious about what the future looks like, and see what other types of products and services you may be able to offer to the people around you that may be cheaper, you know, and who may believe you because they've heard of you or they know you and you can acquire them. So hopefully that's a bit of helping hand and voice.
Thanks. And Brian, from your perspective, obviously looking very globally rather than locally here, you know, what's your view on the investment, you know, the current investment landscape, and how do we think founders need to be thinking about that over the next year or so?
Yeah, so I mean, I'll probably tell something that most of you already know, but you know, cash really is critical in these sort of environments. And it's not necessarily because you won't find the one investor, but really the syndicate that you need to really get your next round closed. And so it's, I think, imperative that everyone think about what their runway needs to be to survive. Survival is sort of the name of the game in sort of these downturns. The ones that sort of pursue what I like to call the Thelma and Louise strategy of just spending cash until you drive right off that cliff is, you may have the best technology, you may have had, you know, the winning customer contracts, but you ran out of money and you had to shut your doors, and that's tragic for, you know, really getting your technology sustainable for and long-term business success. So ensure you're thinking about cash to live and fight another day. Not saying be so overly passive that you let your competitors start eating your lunch, but you have to be very sensitive to the dynamic of how you get that next round to close. Timelines are going to drag out. Don't be fooled by the number of meetings you're getting with investors. they're still taking the same number of meetings as they did before the downturn, but they're investing in, you know, maybe 25% as many companies at this point. It's that delicate balance of, you know, trying to time the market and waiting for, you know, valuations to fall to, you know, have we hit the bottom yet? And some of these other investors that join your syndicates may stretch that out, delay your close. The pressure is going to be on your balance sheet. You might be running low on cash. That's going to bring the vultures out that try to drive your company, you know, with even more kind of onerous terms. And so just be very sensitive to that. Try to approach your investors from a position of strength. Show them that you have some cash on the balance sheet. Show them that you have some customer traction. But also try to find the right sort of investors that you engage with, the specialists that, you know, are still writing checks like us and others out there that can appreciate the nuance of your approach and how it fits within the broader aerospace ecosystem, that can drive some revenue upside for you as well in conjunction with the investment. Those are the partners to try to find in these areas, because they are still writing checks. They're looking for good deals, of course, but yeah, and so you have to be reasonable on what the value of your company is. It may not be worth the same as it was 12 months ago. But as long as you approach all of that with just a very kind of open-mindedness to the deal that comes through and a realism to how long it might take to close, that's the best time. You know, some of your competitors will fail. You are going to be able to grow market share if you survive, and then you're going to be positioned for an awesome future in kind of 2024 and beyond.
Thanks, Brian. And Philip, I'm really interested in your perspective on this, given, you know, that you guys clearly have a proper long-term view of things. What is that impact in the short term from your perspective?
Look, in my opinion, every challenge can be changed into an opportunity, and whether you are a government fund, a startup fund, or a private fund manager, I think it applies to everyone really. So as long as you focus on building things that people really need and you ignore the noise in the market, then you should be fine, right? Building on Brian's point, yes, cash flow is very important. So it might take you a little bit longer to raise that round than you had anticipated. So once you do, make sure, you know, you budget for the right runway, maybe 18 to 24 months, just to be on the safe side. If you raise again before that, perfect, but just make sure that you're covered from that part. But I'm very traditional in the way that I look at business. So I think as long as you're solving a problem for someone, and you're finding product market fit within that, there isn't really a challenge, right? And it's very easy for all of us to either caught up in the hype cycle or now in the downturn news. And I'm a big believer of just ignoring all of that and focusing on what's important. The one thing that we're personally suffering from right now is the valuation hangover that a lot of great founders have actually that are actually suffering from, right? So although they might be solving a real life problem with a fantastic solution, their valuation has been pushed to such great levels that in the current market climate, you just cannot justify an investment. But you know, there are a lot of dynamic founders out there who don't see that as a problem for themselves, and they've got good relationships with their investor base. So even maybe raising at a little bit of a flat or down round doesn't really distract them for the end goal of creating something that really people need.
And you mentioned there, you know, thinking about you know, that kind of wider investor network. So maybe, Philip, I'll come back to you in terms of, you know, if you're thinking about those syndicates of investments, what is it that you're really looking for? You know, what is it that really stands out to you as a team is beginning to pull together that, you know, that perfect match in terms of the syndicate of investors?
Look, I don't really care so much about the other investors, to be honest. So we obviously look at whether an opportunity fits into our mandate. And therefore, this would also be an opportunity that can benefit not only from the capital that we deploy into the company, but also from our network of value-add services that we're slowly piling together. So we want to be that value-add piece. We want to be the leader in rounds to really set the standard, not only with the terms, but also with the additional benefits that we extend to the founders. Obviously, as our mandate is fairly widely spread, we cannot be experts in every single field. So I might be interested in an aerospace company. So we would love to partner up with someone like Boeing on that, because they are clear industry leader within that field, right? So there are some instances where having a industry specialist is useful, but for the most part, we feel very comfortable with our setup to be taking the lead.
And Obediah, what's your view on the power of the syndicate?
I mean, being Middle East biased, right? Because that's kind of where we are based, and we're trying to perform well. I guess geopolitically, we're sitting in an environment which is doing okay. You know, we have a fossil fuel that's producing money for the sovereigns. The sovereigns are trying to add value to the local ecosystem rather than go and buy assets in European or US markets. So I guess together, when it comes to syndicate, similar to what Philipp said, it doesn't really matter who's on the cap table. The only thing that's important for the Middle East especially is a lot of the family groups around us are not good at leading rounds. So they rely on names like us to set a valuation, have a specific terms that they can build on top of. So normally the VCs in this market would have to be the leaders. And this is something that they're becoming better with. And then the family groups are becoming more comfortable around us in joining rounds. So I would say the best syndicate for us is a business that has already done a bit of due diligence on the market and understands who their customers are, because family groups here run the Middle East. So if you can make one of them your customer, there's a big chance that you're going to make a lot of them your customer. So for us, if we can envision adding value to that cap table and saying, you know, we're happy with these terms, we're happy to lead the round, and we have these family groups to come on top and complement, I think we're going to see more of that, especially for the coming months. Again, because most of the family groups here are exposed to oil and gas, industrials, utilities, all the commodities that are making good money at the moment, and they have cash to burn. And most of them have employed 2 or 3 people to invest away from that holding, is probably the best way to say it, with a segregated vehicle. And they're looking to be part of cap tables, you know, because they've never done it before. So yeah, I guess I'm enthusiastic, but for me, it doesn't really make a huge, you know, difference to who's on the cap table, especially when you're investing in seed. At this point, I say to a lot of founders, if you have sold it to your friends and family and they trust you and you've got money from them, it shows a lot about yourself, you know, that you didn't rush into this. You thought about a business, you sold it to your friends and family. They didn't only just believe in the idea, but they gave you their own cash out of their pocket. That shows a lot about the birth of the idea, that then makes it a lot more investable. When if you're, I'm not saying that's the route for everybody, because some people may not have a lot of friends, right? You may not have a big family. But I'm saying that's a very good indicator for us. That helps us, you know, come in on a round.
And Brian, your perspective, given that for some of our aerospace investments, it takes a lot of money, it takes a village. What's your view on the syndicate?
Yeah, I mean, the syndicate's really tricky and capitally intensive, sort of hardware focused businesses. A little different when we're talking software. But in the same sort of vein, you know, we want to be in a position to find startups where we are comfortable based on our understanding of the industry, our access to technical experts, the diligence that we can perform, like leading the charge, right? You know, somebody has to step up and say, this company is going to be the winner in its space. We're taking the best bet on them, and we are going to ensure that they're ultimately the de facto standard in their particular market. And so identifying that early on, getting the likes of some sophisticated investors that actually, you know, I'm not saying other investors are guessing at what's going to be successful or not, but there's certainly some that were more hype driven than kind of rational driven. And so, you know, whether it's us, whether it's other investors, kind of looking at the sort of mandate, focus, and experience of those investors that are there already. Like, was this something that was properly diligenced? Have we properly diligenced it? And can we stake our name on it and say, look, this is the one that we're backing, so that we can then go to our partners at later stage investing cycles and say, this is the one that you should write that $50 million check in to help it grow. So we firmly believe that syndicates are necessary for these startups in the long run. You know, if we can find one early enough, build the confidence to kind of give it some substance, some credence that this is the one that's been really kind of looked over and chosen as the one of many to invest in. I think that's good signaling, and that's why I think this collective group here is sort of our abilities to kind of drive those long-term outcomes based on who we're picking today is so critical.
And just as a bit of a follow-on from that one, from each of you, just very quickly, what's that one top tip that you would give to founders in terms of, you know, building the best, you know, post money in relationship with your investment group? Philipp?
I think communication is key on that front. You know, I feel sometimes founders see the signed check as the sort of the end of the relationship, even if there are a lot of values to be derived out of that relationship. So we encourage all of our founders, as well as the fund managers that we support, to continuously speak to us. We do weekly donuts where people can just literally come in and on a casual basis to kind of update us on a very sort of casual way on what's going on, right? We all get the quarterly updates and then the formal kind of constructed reports, but you know, what happens between the line on a day-to-day basis goes a long way, and that's ultimately how humans grow relationships between each other, right? So I think for me, communication is key.
Obediah?
Yeah, I mean, communication, it kind of leads on to many things, but it's also always communicating with a positive and even potentially a negative. So I wrote a piece yesterday is saying that we don't invest in dots, we invest in lines, meaning if you see the life cycle of the dot being the first day we met, and then you see the next dot being, you know, we've just acquired new users, you know, we've just opened up this door, this big corporate, but then you have a dot that goes down. You know, negative news. You may have let go of a bunch of good people. You may have had the worst sales month. I get it. It happens. But then the next month you see the dot going back up, and then you see this line trending slightly up with a tilt. Now that at different points of communication. So if that has been communicated to me, now obviously the issue is, right, and many founders understand this, and there's a huge amount of frustration, especially at the moment. Communication, obviously, and visibility from what the investors want right now, right? We're not all experts. We can't see the future. So I get the frustration of we can't always come up with the answers of what we want right now. But it doesn't mean we're not seeing what you're sending us. So my point is, if you're constantly getting into a routine of, if I know you're that company that sends me an email on Tuesday morning at 9 a.m. and you're doing it every week, telling me about certain things, it's going to stick in my mind. I'm only human and I read my emails religiously, right? It's what I do. So my point is, going back to Philipp says, communication and trying to just maintain that, and don't be so negative heart right now if you're not getting the response that you want.
Yeah, just to add to that, if you don't mind. So what was just said, you know, these dots, these updates are super important. But for me, the in between is the most important. In fact, you know, so how did you derive at a certain point? Why? What took you there? And how can we help you along the journey? Right. So sometimes you can anticipate something negative to happen, but if you discuss that with your shareholders, essentially there's some values that can be added to that, and maybe that affects the end result to a certain degree, right? So it's just about communication throughout.
Yeah, I would agree with that, Philipp, and I think that, you know, that's what we're there for, to support the founders. It doesn't always go well. That's the reality of the world that we live in. But building that relationship with your investors so that you can tell them the good and the bad, and as you say, they're on the outside of it, they can see it more clearly sometimes than you can. But Brian, your thoughts?
No, I was going to echo everything that said. I like what Philipp started with, which is the relationship just begins when the check closes, right? If that's some sort of milestone, it was like, okay, now I can get back to work and be left alone, you know, with my investors. That's the wrong sort of mindset to take. that's really when we should be forging the relationship to actually deliver the goods of value add beyond just the check, right? So is there experience? Is there technical support needed? Is there strategy support, customer introductions, talking about, you know, the industry dynamics, whatever it is, like pull your investors into that discussion. It's essentially a free resource for you to kind of pull on that experience. And then the other thing I was going to say, echoing you, Nick, which is there's going to be good and bad news. Don't hide the bad news and just show the good. Be open and honest with your investors. If they've been in this long enough, they know that things don't always go according to plan, right? And they're the earliest signals that they can glean of when things are starting to pivot the other way. Maybe there might actually be some support to prevent it from getting worse, as opposed to, you know, you being fearful of their response and, you know, what does it mean for a follow-on investment or something like that. An investor is going to much more appreciate transparency and the open communication sort of philosophy.
Thanks, Brian. So just turning to some of the questions that I'm seeing coming in on the Zoom, and one that stands out to me is raising money as a female founder is harder anyway. Any advice on dealing with the biases, etc., if you're not one of the boys? Anyone want to jump in on that?
Go on, Philip, you go ahead.
Maybe we can share that one. I've got like quite an extreme view on this, so maybe let's kick off with that, and then we can soften it after. But I personally don't have a bias, right? And our fund doesn't. We are 50-50, actually 60-40 split across females and males. For us, it is all about performance. So if you understand the problem that you're solving for better than anyone else, and you have a solution that truly solves for that issue, then that's all that matters. You can be pink, orange, female, male, like I really couldn't care less, right? And this is my stance on that. So I don't think any female going out to raise funds should feel nervous about that point. You know, I think that it's one of those noises in the market which are just to be ignored.
Yeah, I guess Philip said it pretty good, but what I would say is as well, there's certain figures in the female industry that are, I would say, promoting a good cause. If you can bring them on for your journey, I would definitely, you know, envision or entertain that discussion. As I said, I sent a link to that group, but there's always new announcements here in the UAE. I mean, this place is changing every day, and we just had our first, you know, all-female founded fund get a big ticket investment in Abu Dhabi. It's just another, you know, progress. But as Philip said, it doesn't matter. I mean, at the moment, I think most people are driven on performance more than ever. So it doesn't matter, you know, who you are, where you're from. But I would say the geographics in which you operate have come into effect, obviously, given some geopolitical situations. So I would be key on that as well. I mean, if you offer something in a certain market, or if you offer something that could potentially be exposed to currency risk in a certain relationship between two countries, we have to factor that in as well. So it may be out of your control. That's my point.
And I'm happy to speak to it a little more broadly than just UAE, given kind of the global footprint that we take. But, you know, there's a big discrepancy, you know, across all of venture, and particularly aerospace venture, of kind of diversity and diverse founders. Aerospace in and of itself notoriously lags in diversity metrics. Just you know, having a good pool of professionals that it supports in a diverse way. And then when you take venture on top of that, which has been notoriously lagging in supporting kind of diverse founders, it compounds. But I would say, in my experience, you know, if you're a strong, you know, kind of diverse founder trying to get your technology on the center stage, one, you know, be very targeted in who you're looking for from potential investment first. There's some out there that may have reputations, may not have a single diverse portfolio company, may not have a single diverse member on their investing team, and use that as sort of signals for kind of the reception you can get. Your time is precious. I get it, you want to raise money, but other than just practicing your pitch one more time, if the chances of getting an investment because it just doesn't align or it does fall into that boys camp, it's probably not a good use of your time. There's others that are much more kind of conscious of trying to transform the industry a little more, look for those kind of statements, either kind of directly or via referrals, sort of from others. Look at the portfolio to see how diverse their founders are today, look how diverse their investing teams are, but also just approach it kind of directly with them too, of what they think about diversity in terms of sort of a framework for the kind of the future of the tech ecosystem. And you should be able to read these folks pretty well of what they believe in sort of to be a genuine sort of philosophy versus, maybe the PR sort of check the box sort of response. And you want to get the genuine sort of belief that there is value in supporting a more diverse founder group, and try to hit yourself to those because I think you'll have a much stronger long-term relationship.
And of course, if you're a female founder, do reach out to our team. You know that we're particularly passionate about this area. So do reach out to us at xelerated.aero and we'll be happy to chat with you. One question from longtime friend, Paul Pereira. Hi, Paul. He has asked, given the investment into sustainable technology for aerospace is a long-term patient capital, how do you recommend building a business case for 10-year returns as a startup? Brian?
Hi, Paul. It's good to see your name again. And it would be great to catch up sometime. Boy, it's tricky, right? You need to find, it sort of goes back to, again, trying to find the right sort of partners to work with. There are those that can take 10-year horizons, really believe in 10-year horizons. And there's others that might think that, but their first question is, what have you done for me lately? Or where is your path to profitability in the next couple of years? So I would just make sure there's good kind of alignment in the early stages of what your kind of investors are looking for. That said, don't just show for the sake of it the proverbial hockey stick of this is going to be totally flat, and then in year 9 and 10 I'm going to jump to 1 billion in revenue. I think having kind of a measured conversation of the technology milestones that are going to continue to play out to demonstrate progress, coupled with the other sort of cycle of adoption, kind of global incentive, and just kind of the ecosystem transforming to a level of scale that matters, and how that sort of coincides maybe in year 6, 7, 8, 9 and finally into 10. I personally much prefer a realistic sort of timeline and business case being shown there, because we as fund managers are all kind of portfolio construction managers at the end of the day, right? We build certain things that might have slightly nearer term timelines, some in the midterm, and then you got to take some of the long bets that are kind of transformative and home runs. And so just sort of need to fit into maybe one of those buckets, be honest about it. Don't show something in year 3 when it's not going to happen till year 9. That's like the worst situation to sort of be put in. That'd be my perspective.
All right, well, conscious of time, I just want to have a very quick fire final question that has come in from an anonymous attendee. Interesting point about being hype driven. What's something that your fund is hyped about at the moment? Philipp?
I don't know. So it's a hard question. I don't think we're hyped about anything. I mean, we are passionate about certain problems within the ecosystem that we operate across. But I wouldn't say that we're specifically excited about the metaverse, for example, or any of those hype topics that you see out there. There's certain problems in the UAE market, one of which we spoke about before we went live, which is a big banking problem for SMEs. This is definitely something very high on our agenda. Other financial products extended to those SMEs are very interesting too. So there's a huge funding gap. Majority of the SMEs within the UAE and the wider MEA region do not have access to banking products such as debt and so on. So there are a few opportunities that we're chasing, but there's certainly nothing we're too hyped about.
Obediah?
I guess to be a little bit more specific, hyped or excited, you could say it either way, but in this current environment, you're going to see quite a few B2C platforms disappear. You know, they're going to run out of cash that they had, which it was like, you know, investors over the last few years said, here's some cash to spend on marketing and go and hire 20 people. But in 2 years' time, we want all that back and it stops. You know, that's what founders are experiencing. Now, those B2C platforms are going to narrow the market, meaning there's opportunity. But also we're looking at the very small parts. I mean, I think I saw a name in here, Diana, you know, Neurobotics. Now, she's very clever. Why? Because she's pulling data from a VR system to then go and sell to all these autonomous aviation companies. You know, those autonomous aviation companies, those assets are not going to be flying for 4 or 5 years. I don't know. You know, I'm not ready to get in a plane that has no pilot. I'm sorry, I'm just not. But to hold the value of that asset, Diana's going to feed it data. And that company needs to hold the value of that asset. So if you're looking at saving energy, everybody's looking at, you know, lowering emissions. But we're looking at certain algorithms from wearables to the cloud that save energy through the movement of data. So we're excited about looking deeper into specific things. You know, if it's the propellers for drones, how are we investing in the patterns around protecting those propellers? Because a simple, you know, plastic bag floating around the desert can cause a big problem for logistics companies. So we're looking at really micro areas where people have come up with some specific value. And it normally comes in times like this, you know, where we see certain players fall from the market. We see, you know, these new bubbles and ideas come alive. So I would say we're personally as a fund excited about cybersecurity. You know, there's been a bit of a bubble on the valuations of cyber given the geopolitics. We're excited about smart city, making cities, well, allowing cities to make better decisions. And I saw a question around, you know, ESG and things like this that could fall underneath that bucket. And then obviously financial technologies. You know, I'm very interested to see who can come up with creating liquidity in private markets. You know, I think that's going to be a big key player for the next couple of years because there's not much activity in the public market.
And then finally, Brian, obviously, apart from the next 10 of our Aerospace Xelerated cohort, what are you guys really hyped about at the minute?
Yeah, the Aerospace Accelerator, that's a given. I'd say beyond that, you know, hype is the wrong word because hype can have the negative sort of irrational sort of connotations. You just sort of jump in because everyone else did. I think for us, it's enthusiasm and passion for change. And I'll mention kind of besides the digital services tech that we're focused on now, the climate tech and sort of general sustainability transformation of aerospace is a really exciting one. And I much like Obediah was saying, it's not just taking emissions out of the back of an airplane. It's the entire landscape, manufacturing footprint of how planes are ultimately sourced, built, flown, and aftermarket kind of end of life, recycled, terminated at the end. And so there's so much opportunity for measurable improvement at every stage of that journey, whether it's consuming less electricity as you're manufacturing something, whether it's, you know, recycling the aluminum instead of it just sitting in the desert in a scrap heap. Like there's a lot of interesting tech out there that traditionally had been sort of just ignored. It was more just build planes faster, get incremental 5 to 7% efficiency gains with each new model. There's so much neat things we can continue to be doing to make a difference in this element of the climate focus.
Thank you. And thank you all for your time today. Thank you for joining us, everyone, and to our panelists. Thank you. And we hope to see you in Abu Dhabi real soon.
Look forward to it.
Thank you.
Thanks all.